we have the hourly price chart for GameStop Corporation, stock ticker GME. So as we can see here, the stock is showing a bit of bounce here into this trading session. Currently, we have broken above the 23.6% Fibonacci retracement level that I mentioned in the prior video. And in addition to that, we have also broken above the 20-period and 50-period exponential moving averages. Since this is an hourly chart, this means that we are looking at the 20-hour exponential moving average and the 50-hour EMA. On balance, this move to the top side is encouraging because it does suggest that we can start to target the following Fibonacci resistance zones. In addition to that, we also have a bit of a positive reading here in the relative strength index, which does suggest that positive momentum is building. However, when we look at this indicator reading, I do want to mention the fact that the upward slope here is a bit dramatic, and this does look to be somewhat unsustainable given the fact that the broader trading momentum is clearly in the downside direction. Since we don't have a real confluence here between these two factors, and given the fact that this recent price move higher is showing such a strong upward slope in the relative strength index, it is possible that this move higher may not be sustainable for much longer. All of that said, the current price target currently rests at $23.05 because this is roughly where the 38.2% Fibonacci retracement level is currently located. If we were to break above here, what would be interesting to note would be the fact that we would also be breaking above this purple line here, which is the 100-hour exponential moving average. This is a very critical and commonly watched exponential moving average, so this would be a positive signal if we were to see an upward break. Pulling out here a bit, we can see that this current trend wave, however, is somewhat small in comparison to the larger declines that preceded it. Specifically, what we're looking at here is the decline from the $30 mark. Of course, this is a price zone that I've been watching for quite some time because it did mark a level that was likely to be showing as attractive to anyone on the short side of the market. Prices are currently trading at $21.73, and this does put us within relatively close proximity to this $23.05 level, but I really will need to see a break here in order to start to expect some further upside on a near-term basis. Moving down to the 15-minute price chart, we can see that this recent upsurge higher has allowed the share price to break above its prior resistance zone. Unfortunately, this is not a substantial break. We're not seeing a huge amount of surging momentum here that has followed, but these are important technical breaks because not only do we break above the high that was posted during the August 6th trading session, which came in at 21.57, but then in addition to that, we're also breaking above the 200-period exponential moving average on the 15-minute price chart. Ideally, what you would like to see in this type of situation would be a stronger breakout to the top side. But what we can see here is that this has created a momentum condition, which is a bit more favorable because it looks more sustainable, even though we're trading on a shorter term basis. Finally, I would encourage people to look at the trading volumes here because we are seeing some upward surges here, not only in the overall volume itself, but in the fact that share price momentum is being supported by positive trading value rather than negative trading value. This can be seen in the trading volume bars themselves, which are much more green than red at the moment. Moving out to the daily time frame, we can see that the indicator reading is still showing a bearish momentum condition. This is not exactly encouraging, which is fairly obvious, but we are starting to see some flatlining here within the relative strength index itself. It should be noted that the indicator reading did not fall into oversold territory, however, and this does suggest that longer-term price moves are still possible, given the fact that the share price valuation could drop without yet sending the stock price into oversold territory. As a result, from the longer-term perspective, we have to remain focused on the 1770 level because this does mark the important price zone as far as support levels are concerned longer term. Moving out to the AMC price charts, we can see many of the same trading activities starting to occur. Specifically, what we're looking at here is a prior decline, which resulted from the prior highs, which came in at roughly 521, followed by lows, which developed at 479. Since then, we have seen an upward trajectory in share prices, which has now forced the stock through its exponential moving average cluster. We can zoom in here to see this activity a bit more closely. Specifically, we have not seen a periodic close above the exponential moving average cluster. However, the fact that we have seen some sort of an upside break here is encouraging on its own. Ultimately, what many in the market would probably like to see would be a break above this $5 mark into the weekly close. Weekly closing periods tend to be much more important than daily closing periods, and given the fact that tomorrow is a Friday trading session, this makes the ultimate price close on this trading day much more important. For these reasons, we will be watching tomorrow's trading session in order to determine whether or not this $5 level was breached in a more convincing manner. Pulling out here a bit, we can see that the stock is currently trading within a sideways consolidation pattern. So far, what is least encouraging about all this price movement is the fact that share prices did fail right at this 78.6% Fibonacci retracement level. To get this level, I'm using the prior price highs, which came in at $5.44, and then looking at the more recent price lows, which came in at $4.41. With this in mind, share prices did move all the way through most of its Fibonacci retracement zones. However, there is a clear price failure here at this teal line, which is the 78.6% price retracement. If we are able to convincingly break above the $5 mark and close here during tomorrow's trading session, I would expect this area to at least come under pressure in the upcoming trading week. This 522 level is quite significant because this is essentially the last block that's standing in the way of the stock retracing from its full price move into this 550 area. As you probably noticed, many of these price differences are relatively small in size. We're only talking about 20 to 35 cents in overall price movement. These numbers might seem insignificant, but they're really not insignificant because currently what we're looking for is a way of breaking out of this consolidation range and putting an end to the sideways trading pattern that has resulted over the last few weeks. If this is able to occur, then we can start to retarget these prior highs, which came in at $5.75. Of course, this level is very important and critical because this area marks a triple top resistance zone that has forced prices lower every time it's been tested on prior occasions. If we were to see a fourth failure here, I would consider this to be a major price event that would suggest share prices are ultimately on course to move much lower in coming trading sessions. Over the next few weeks, what this would mean would be that we would more than likely be facing new lows for the stock. Specifically, what this means is that we would likely be testing areas below this 440 mark. As things currently stand, most of this price movement does suggest share prices are most likely to start continuing toward the top side. As we can see in the relative strength index reading, the overall momentum direction is focused on a bullish trajectory or in an upward direction. If we pair this with the fact that the stock has managed to form higher lows at roughly 480, all of this does suggest that an upward break of this 78.6% retracement level is the most likely outcome during the following trading week. For all of these reasons, I think it's highly important traders watch the 525 mark into tomorrow's trading session and to monitor the overall price close that we see during that session. A stock close above the $5 mark will likely reinvigorate the bullish side of the market and possibly discourage the bearish side of the market. As things currently stand, I do think that we are at somewhat of a critical inflection point here because we are seeing such a major decline in GameStop share prices. We haven't really seen this extend into AMC as much, but if we don't start to see some upward trajectory here in one of these stocks, the broader outlook will suggest that we will start to see both of these names heading lower in the months ahead. Here's the current market outlook for AMC Entertainment Holdings, stock ticker AMC, and GameStop Corporation, stock ticker GME. Our High Value Trading Strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market-beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.